Hi traders, this is trend analysis video tutorial that I promised you. By trend analysis I mean we'll be analyzing the chart in the direction of the trend, and our important tools will be the trend line, the technical patterns, and the Fibonacci. And so the first thing that we need to find out is where the position of the price right now in the chart. So you need to understand at which point are we at right now in the market. And so I'll be analyzing this. I'll be doing this analysis using the daily time frame. And the first thing we have to do is to zoom out, so that we can find out the trend line, the trend of the market. And as you can see, the trend is bearish, but I will try to use my trend line to find out where we are at the market right now. And that is very important to know, so that you don't find yourself buying when you are supposed to sell and sell when you're supposed to buy. And so this is my trend line. The first thing you do is to draw a trend line where you see the price might fit. So after drawing your first trend line, you can clone it. The reason we are cloning is because we are trying to make the price to fit in a range. Remember, when the price is in a range, you can trade it better because you understand your position in the market. And so after fitting you can see that the price is in a bearish range and in a bearish tendency. So the next thing is we zoom out and find the technical pattern. Remember, our second tool was the technical pattern, and so we are trying to look at the technical pattern in the market, and this includes the currently forming technical pattern or the previous technical pattern. And by that we'll be using the low or the high. And by this time you can see that it is best to use the low because the price is moving from a high. So we'll go back to the trend line again. This time I'll use your dotted, and that is our support trend line. As you can see, it made 3 touches and broke out. And so to complete this trend information of a pattern, we need to clone it again, or you can just draw another one in there to create the resistant trend line. By that you can see that we form another trading range from this level, and the trading range right now is you can see the overall trading range was bearish, but now at this level the trend was bullish, but it came and it dropped down and broke out through this support trend line. And so right now, as you can see, the price is in the middle of the range, of the overall range, which is the bearish range. And so the next thing we need to understand is our position and what we need to trade next. And so because we are only looking for almost 100 pips, we're going to move down to a 4-hour time frame. So in the 4-hour time frame, you can realize the price is in a bearish trend, but we also need to find another range here so that we can identify our exact position in the market. So by this, I'll be using another trend line, creating a touch at that point and cloning it again to create the support trend line. You can move it just like that and have your touches. Make sure it touches okay, like that. So as you can see, the price at this point, the price was moving in this range, and at the moment we are at a bearish, we are at the support of the trend. And so what can we expect? This is where now we bring in the Fibonacci. Fibonacci will help us, because we know in the overall trend we should be selling this. We should be selling EURUSD, because the trend is bearish, the overall trend. And so when you want to enter a sell, you really need to wait for the pullback, and catch the after the pullback you catch the impulse. And so you'll be using the Fibonacci, this place, the Fibonacci around this place. And what we can expect at this point is that the price, if we have our high, we have our low at 1.0944, we can expect our price to rise to around 61.8 Fibonacci before we sell, or maybe 50 Fibonacci level, so that we can sell all the way down. Let me zoom out that. As you can see, our price should be moving down, and so at this point we can expect to maybe our price will rise up to around 61, or the previous low. This was the previous low, remember, which was broken. So we can either rise up to this point or up to 61.8 before we go low. And this is how this is where now the last thing that you need in your trading tool is your patience. By this point you watch out for the market to create the pattern that you expect, and if it doesn't make the pattern that you expect, then you might decide to leave that analysis. But after this, you can see if it gives you that your expectation, always watch out for the confirmation, which is the price action, and trade with confirmation. Thank you for watching.